YouTube, what's going on? It's King J here again, back with another forex vlog. And today, as you can see, it's March 15th, 2022. Hope everybody's out there doing well. All right, and let's go look at today and see what we got. We have another account growth, almost 4%. I know, like you're saying, 4% on that small account doesn't really matter. Yeah, yes and no. I mean, it shouldn't matter the account size. If you can do it on this account, you should be able to do it with 100 grand. You know, but it has to be consistent. And so far, I like what I see, but it's only been like a couple days since I've been using this on an actual live account. It's a fairly small account. But, anyways, this is why you don't pay attention to pip differences. See how I gained 3.9% today, but the pip difference is 689.1 pips negative. Reason being is that when you trade pairs that are like they're calculated differently, kind of like this one right here, it's calculated much differently. But you can see the lot sizes are what matters. It's how much dollar amount you're risking. It's not the lot size. The lot size is only going to determine how much margin you're going to use. Because it goes, you risk X% on your account. Then you go, okay, it's $50. And you're like, okay, what do I need to risk $50 on? And it depends on your stop loss size. Then once you know those two, you can calculate how many dollars per pip you're going to risk. And if you know your dollars per pip, well, then you know your lot size. And then when you know your lot size, then you know how much leverage you're going to use and how much margin you're going to have to put up. So it goes in that order. It doesn't go in any other order. Some people try to put it in any other order, but like just figure out where your stops are going to go. Figure out what how much per trade you're going to risk, and then go from there. See, yesterday I risked 1% a trade. Now today I risk 2% a trade. Because I got a little confidence in my system, my setup, and I was like, okay, well, I'm going to risk 2% a trade. So I went ahead and did that. As you can see, I was losing 2% on trades, but I was willing to gain 4. And my win percentage is about 38%. Well, I need 33% to break even. Honestly, there's 2 trades in here that I don't think I think where stop loss placement's like critical. It's like key, especially intraday trading. I feel like you see eventually I had 2 sales that I hit my take profits. These 2 stops are too close. I mean, I had the direction right this time. I had the direction right this time. It eventually had a 2 trades that went in my direction, 30 pips and another 43 pips. But that's the thing, you guys. Depending on it all depends on how your setup is. Stop placement is key. Stop placement is very important. I didn't have to have these 2 losses. If I hadn't had these 2 losses, it'll look like yesterday's win percentage, which would have been 45%, which is funny because that's about where I'm at. Like I said, I'm using 1 to 2 risk to reward, and to break even on a system that uses 1 to 2, you need 33% to win. So to make money, you need 33% plus a cushion. 40%, 45%. And here's my profit factor, 1.26. You see all the probability, my Z-score. Look at the average win. The average win is like double the average loss, which makes sense because I'm risking, it's a 1 to 2 setup. I've decided to just use the system with the 1 to 2 risk to reward. I don't want to go 1 to 2.5 because then the win percentage goes down. Then you have to have trades that like run longer, and it may not happen all the time. So, yeah, that's that. I mean, honestly, I think there are probably some people that are probably a little smarter than this at me that actually have. I'm talking about real world testing. I would say if you got a setup or a system, start out with 1 to 1, see what your win percentage is, and you either adjust it up or down. You either adjust your risk to reward up or down. So if you got a 1 to 1 system and you're winning 50% of your trades, maybe adjust it downward, see what happens. Maybe adjust it like 0.65 to 1 or 0.7 to 1. See if your win percentage goes. If it goes up, it should go up, and then adjust it back the other way. Look at your profit factor. Look at your, your average win, your average loss. Because that's all, like I said, it's all interconnected. Eventually, people out there are saying, oh, I got a 60-75% win rate, but I'm risking like 3-1, 4-1. I'm like, eventually your win percentage is gonna go down because you're gonna be hitting stops trying to be like accurate. The higher your risk to reward is, the more accurate you're gonna have to be. You have to be pretty damn accurate, you know. But you need, it's all in line. So as you can see here, yeah, it's 5 point something yesterday. It was like, I know you saw that flash on the screen. It's like 5 point something yesterday. It's 3.9 yesterday. So we're like over 10% for the week. So you're averaging, I'm averaging 5% a day. Is that sustainable? Probably not. Is it attainable? Like over an average? Yeah, maybe so. Because guess what? Tomorrow I might not get anything. I might just get locked out of all my trades. So that's the other thing. So this pair yesterday, it was a we were hitting. Today I had one trade stopped out, two trades stopped out, three trades I'm done. That was it. That was just my rule. I got stopped out on three trades. I was like, it's just not hitting. The Euro CAD today, like I said I was going to switch to the Euro CAD. I think I like it a little bit better than the Euro Yen because both those markets are open and they overlap each other, Europe and Canada, and so does Sweden and US. They overlap each other because Sweden, Swedish krona, that's basically European. It's European. They overlap. You know, the news comes out at the same time. The stock market's generally open about around the same time. Because Euro is just the European Union. It's just a bunch of European countries. This open around the same time. So I kind of like keeping currency pairs that have their banks open around the same time or at least overlap, especially in the those high volume sessions of forex, which is number one London and number two New York. Well, New York actually is number one because, well, I would say it's the overlap, London, New York overlap. You can trade pretty much all of London in like an hour after that and be good. You can trade an hour before to an hour after London closes. That's all you need. Done. Honestly, if you're an intraday trader, trading forex currency pairs, that's what I would stick to, and I would stick to countries that are open during that time. Like I said, I know I said that in the last video, but I'm just reiterating that. That's just my point. But anyways, back to this about these losses. Okay, so one thing, like I said, I got these two losses right here. I didn't need to have those. It's just the placement of the stops. I think I'm going to move my stops a little bit further away. I'm going to adjust the algo, and it uses indicators and all that stuff. So I'll adjust the indicators to where the stops are just a little bit further away, so we don't have this happen, because this could have been prevented. I could have just taken this trade, and then I would have took another one, and it would have made money, and maybe I would have had one loss to turn against me, but most likely no. It would have been like a small loss, but not a full stop. See, these are full stops. This full stop didn't have to happen. This full stop didn't have to happen. I should have just entered here and exited somewhere like where this one took profit, or a little bit before that, and then I would have gotten another one, and I would have took profit on that one, and it would have been that. That would have been that. First and foremost. So we'll adjust the stop to see what happens tomorrow on Wednesday morning. Second is what I told you guys. Now, if I had kept trading this Euro Swedish krona, if I had kept trading it, guess what would have happened? I would have wiped out all the gains that I would have got. I'd be negative, like very negative. This is this is one of the things where I tell people, like I said, I'm not a professional. I'm not on here claiming to be a professional. I'm not on here trying to give you guys like, professional tips. I'm not licensed to do anything. Like, basically all the stuff I can say, it's just my opinion. I basically don't have any weight on anything. I'm not your financial advisor. I'm not a guru. I ain't gonna sell you nothing. None of that stuff. I'd say it every video. But in my personal opinion, not my professional opinion, because I'm not a professional, but my personal opinion is that having a daily loss limit is it's not just about stop loss where you place your stop. It's about having a daily loss limit, especially if you're an intraday trader. I had it to where the expert knows that if it loses a certain percent, I risk a certain percent every trade. And if it gets, you know, if that pair is just like not today, and if you go to a chart, it just wasn't great. It was a low volatility day, so it wasn't nothing really happening on that pair. Usually, this pair moves pretty damn far, um, with a pretty decent spread. But when you hit your loss limits and you're just like boom, and it's like boom, one, I made money, boom, then I lose another one, boom, then I lose another one, boom, then I lose another one again, and you're just like, that's it, that's it. You know, you said you're gonna lose X percent, just lose X percent. It is exactly the same thing as if you're in a single trade and you're talking about I'm only gonna lose this, but then you keep moving your stop further away because you think the price is gonna turn around and go in your favor. No, it won't. It won't. Not more times than not. No, you just gotta let it hit the stop. There are some times where you're just like, I'll adjust my stops, but when I do adjust where my stops normally go, but when I place the stop, it stays where it's at. That stop does not move. Not unless you're moving it to break even or something like that. You know, it goes in your favor. You don't move a stop if it doesn't go in your favor. You don't ever do that. That's opposite of what what you should be doing. If a stop, if a price moves against you, you let it hit, you know, you don't move your stop. If price goes in your favor, if you want to move it to break even, if your system's like, yeah, move it to break even and you want to trail it, whatever, that's different because you're in profit. You don't ever move a stop if you're at a loss. Ever. Ever. You know, that's like rookie mistake. So with another thing, you know, like I said, back to the other thing, is that when you lose a certain amount, like you say, I'm only going to lose on this pair, I'm going to lose this much. If you lose that much, stop. You're done. You're done with that particular pair. And then what happened is this pair just was boom, 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 boom. It just picked it up. And the reason being, they aren't, you know, they're not interrelated. This is why diversification is a huge deal, especially, you know, even in forex trading, intraday swing trading. You know, these guys, you know, like I said, these guys want to trade 28 pairs. I'm like, you know, some of the stuff I like, but I'm just like, at the same time, I'm just like, you don't need to trade 28 pairs. Not to make a lot of money, you don't. To make a good day out of it, you do not need to trade 28 pairs. At the most, 3 to 4. You do not need to trade 28. That's just the long and short of it. And this is pretty much some proof of it. And do I have long term proof? No, I don't. You know, so whatever. I already said I'm not a professional. That's just these are just all my opinions. You know, and this is just a, you know, one guy's, you know, some one retail trader's blog. So, but as you can see, it is important to diversify amongst currency pairs. I trade 2 currency pairs. There's 4 currencies here: the euro dollar, the Canadian dollar, the US dollar, and the Swedish krona. That's 4 currencies, but it's 2 currency pairs. And when one when one like this one, like today, yesterday it was hitting, like, you know, it was like money on top of money. Yesterday it was hitting, today it wasn't. But guess what? The other pair picked up. That's why you got to diversify. That's why you got to diversify. So you don't have a bad day all around. Because if you trade euro US and then pound dollar and then they both don't do good, then you're screwed. Because you trade the US dollar twice. You know, it's a choppy day for the US dollar or whatever. And you're just like, oh crap, well, now I've lost. You know, at least if you diversify, you trade euro dollar, okay, go trade the British pound yen, for example. It doesn't have to be that. I'm just saying. Okay, British pound yen's having a great day. Like you're just slamming trades out left and right, and it's just like, man, with the euro dollar, you got stopped out on all your trades. You've hit your daily loss limit on that pair, and you're just like, dang, that pair didn't do good. But here comes the British pound yen, it comes through for you, boom, hitting one after the next, after the next, after the next, and then you're just like, okay, cool. Like it wasn't a bad day. It's a pretty good day. This could have been a bad day. This could have been a bad day if I hadn't diversified my currency pairs. Could have been a really bad day. So, anyways, that's pretty much all I got for this vlog. We'll see what happens tomorrow, and hopefully we just keep going up. Hopefully I can get this count to the 200 mark by the end of the week. That would be awesome. So stay tuned. All right, peace.